and I'm at Capital. And in the next 600 seconds, I'm going to provide you guys a quick update on markets such as the euro dollar, Bitcoin, crude oil, the DAX, and gold. And it's going to be a lot of technical analysis, but we will also talk a bit about the macro fundamentals and the news driving these markets. Now, if you're new to tradecaptain.com, this is our website, established literally 3 months ago, almost 4, of course, with November coming to an end. And here we provide you guys with breaking news, educational webinars, market outlooks, and really anything that you might need to be better at your trading. Don't forget to bookmark this page, and don't forget to as well come to the live trading room at 9 a.m. Monday to Friday for a free market update like this one. So let's get going. And before we start, though, as always, I need to stress that trading financial markets is unfortunately risky, and there's a genuine risk that you lose more than your invested money. This is usually because people trade with leverage. Or margin trading, as it's also called. If you want to know more about this, just click here at the risk disclosure statement on our homepage, or just search for risk disclosure with Amana Capital or tradecaptain.com. Let's begin. So here's the euro versus the USD, and as you might remember, yesterday we said that the market is a little bit overbought, and the market needed to pull back. And it did peak here on the 27th, and since then the market has been moving down over the few days here. And as I said, we want to be looking to get involved around 1852. Now, because while I'm a bit of a market guru, I guess, and been doing this for many years, we don't actually know exactly where the low is going to be created. But I think we did a very good job here. It was only an overshoot of 22 pip. And hopefully, I mean, the way this is trading right now, it does look like this was the low, and this market could hopefully just push up to 1940, 1961, and around these levels, take out that high, and we go up to 120 again. I think as well, if we go up to 1920 today, I think we could potentially just reduce the stop level or key level, which is right now at 1733. Now, the reason for me being bullish is because price is creating these higher and higher and higher lows. So we can connect these lows as well with this simple trend line here. Again, we're not necessarily out of the woods, and we're definitely not at profit target, but we did have a nice bounce from the level I suspected it was going to bounce. Could easily just push to the downside, but as long as you're above 1733, which is this level here, I'm not going to change my plan, and I'm going to assume that we can head up to 1950 and 120. Here's Bitcoin, keeps on rallying. You might remember a few days ago we said look to go along here. We said that on the 24th, and we said for this to head up higher. Now the market was trading very close to the 10,000 mark when we did the update yesterday, and I assumed that we're going to go up to 10,000 at least to get that actual claim that key level. And the market did go all the way up, and then breach up to 10,622. Going forward, the market will most likely continue to move up higher here, but this is not really the time to look to get involved here by going long. Rather, I would wait for some sort of a pullback before actually looking to head up higher here. So the levels I would watch would probably be down here. So this is the 15-day EMA. So I don't really anticipate the market to move substantially lower than this level. Fib-wise, I don't actually know exactly from which levels we're going to bounce from, but look at this. This is first, second, and third fib levels to watch. As well, sorry about the noise. I don't know if you can actually hear that, but we are rebuilding, or they're rebuilding the office next door here. So it's a bit of a noise. Sorry about that. So again, I am bullish, looking for this to head up higher. This is the third fib. Maybe down here, 50 fib, that's what I'm going to be looking for. Obviously, this market is going parabolic right now, and if you're trading on the 4 hour or even the 1 hour, it's not really the time to go long. Rather, we need to have some sort of stabilization and for this to head down lower. Now, you can always, it's always possible to trade even in the shorter term. So for example, traders watching the 5-minute would, as an example, look to go long and get involved as you can do on a bigger picture. And from that perspective, This is a 5-minute, and the market is bullish above 97 and 25. You can see how the market went all the way up and then tumbled, and then obviously if it hits back down to maybe 10,200, 10,100, some traders are gonna look to go long here. Now again, this is a 5-minute chart, which I don't necessarily, well, I definitely don't trade these 5 minutes any longer. I used to do that many years ago. I kind of learned the hard way that it's difficult to make it work in the long run. But yeah, you have a short-term option here on the 5-minute. You have a low here, went all the way up and then down and potentially up. And if it goes down, I think traders are going to look to go long again. But my preference is to give this the time it needs. So give it the time it needs. Let it actually peak, and then eventually look to get involved on a pullback. Again, ideally from lower levels around here at 9,000. I think that could easily be touched or so when the market decides to give back some of its gains. Here's the German DAX, and the German DAX going well. So we said a few days ago that we want to turn bullish, and we want to turn bullish from pretty much 13,065. The market is clearly in our advantage, and took out this high this morning. Could move down a little bit more, but I think eventually this is going to take and push to the upside. If you're trading in the very short term, as we've been suggesting lately, then this is the key at 12,902, and reducing that key level now. And obviously the market is pushing down a little bit, so I guess the market on, let me just actually keep track of what we've been saying here by leaving that there. If we just focus on this low to this high, also this low to this high here, I suspect that maybe in the short term we come back here to these levels, which are 10,100. You see all my moving averages there, and could obviously push this self lower, but as long as you trade above this level, which is 12,100, I'm gonna be bullish. So this is what I anticipate is gonna happen next. Maybe a little bit of a push, then up, and then take out this high, and this market could be trading up here around 13,442. This is the price of crude oil, and the idea was to go along here at 57.68. We touched these levels, and these are levels we highlighted already when trading up here. For now, it looks like the market wants to head down a bit, but I think this eventually is just going to push to the upside. There's no real reason to change the bias as long as you trade above 56, which is this level down here. And as you can see, I'm bullish because the whole market is just heading up higher. So I do suspect that around here, the market's going to try to bottom out and then head higher. And here's the price of gold. Now the gold has changed a bit of its momentum lately. As you know, it's trading higher and higher lows. And I suspect if we take out this high, the market could potentially have left this big choppy sort of market and hopefully up, down, and take out that high. So keep an eye on 12,900. Okay, what else? Is there anything interesting coming up today? I still have 2 minutes here to talk markets. Let's take a look at the economic calendar. And for today in 21 minutes, some UK data coming up. But this is really not that relevant for the market in general. As you know, the pound is driven primarily because of the news that the UK most likely is going to be willing to pay what needs to be paid to get negotiations with the EU going, which the market is seeing some sort of a relief, because the market doesn't want to be waiting and being uncertain to what's going to happen with the economic relationship between the EU and the UK forever. So the fact that we're getting news here that maybe the UK is happy to pay, I think, of 60 billion pounds or so to get things going, could potentially here, well, actually did already cause the pound to gain, as the market is now starting to focus on what sort of trade deal we could potentially have in the future, really. Otherwise, you have consumer confidence from the EU. Again, this is interesting data. It's good to know, but nothing really that moves the market. Inflation from Germany, keep an eye on that. As you might know, it was something we talked about last year when inflation rose to, well, you can see here actually. So it was at one point at 2.2. So when it goes up to 2.2, I think people said, oh, it's going to go up to 3% or something like that. It's very easy for people. You might remember when we were in a deflationary state, everybody said, well, it's going to go down to negative, it's going to be the next Japan, and then we went all the way up to 2%. Especially the Germans were like terrified and said, like, oh yeah, we're going to have hyperinflation, back to the situation between World War I and World War II. Obviously, that did not happen. This is very stable here. So really the big event for today is the US dollar and the GDP coming up. Is it going to move the market? Most likely a bit. So keep an eye on this. It's very straightforward. Slightly better data than expected. The dollar gains. Slightly worse of data than expected, and the dollar loses. Mark Carney as well speaks this afternoon. Okay, guys. Thank you so much for joining me this morning. My name was Alejandro Zambrano, Chief Market Analyst here with TradeCaptain.com. Don't forget to join me Monday to Friday at 9 a.m. London time here on this page, the live training room at TradeCaptain.com. As well, if you're watching this on YouTube, and if you're not watching this via YouTube, do click here, YouTube or here, and you'll see that there's a little button down here which you can actually subscribe to. So don't forget, actually down here. So don't forget to subscribe to us so you get notifications when we have uploaded these videos. As well, if you're new to trading, or even if you're not new to trading, as you know, Trade Captain is supported by Amana Capital. They make sure that I can be speaking with you guys at this time in the morning instead of just managing my own account. So don't forget to check out their products and services. You can download a demo. They offer MT4 and MT5, with MT5 of course being the latest version. Just click up here so we know that you came to Amana Capital via TradeCaptain.com. So don't forget to support, and as well don't forget to share. The more you share, the more we care. Have a great day. Thanks.